Last week, it became obvious that traders were ignoring any macroeconomic report. They were focused on just key interest rate changes, in particular by the Fed Reserve. And this week, investors are likely to get ready for the Jackson Hole symposium that starts on Thursday. The Fed chairman will deliver a speech and may unveil the regulator's plans for monetary policy changes. Last week, the Federal Reserve published its latest meeting minutes. The document reads that the central bank intends to raise the key rate higher to slacken inflation to 2%. At the same time, the situation in Europe is the opposite. Thus, the European Central Bank may take a pause in the cycle of monetary policy tightening. The fact is that macroeconomic reports have shown a worsening economic situation. Core inflation is not slackening as fast as expected. What's more, all macroeconomic indicators in Germany are reflecting weakness. Today, traders have learned one more report about the situation in the eurozone's largest economy. In July, the German producer price index dropped for the first time since November 2020. The dynamic should be considered through the prism of the low base effect. Just a year ago, the indicator jumped by 37.2%. Nevertheless, the current changes could hardly be called encouraging. In this light, demand for the euro is quite limited. Let us find out with what sentiment traders have opened a new trading week. The euro-dollar pair hit the low of the correctional cycle, which points to the bearish sentiment among investors. If the volume of short positions on the euro continues rising, the quote may drop to 1.0800. In the event of this, the euro will lose about 4%, which will point to oversold conditions. However, if the pair gets stuck and climbs above 1.0900, the correctional movement may end. Meanwhile, the pound-dollar pair has been trading within the sideways channel without noticeable changes for 3 weeks already. Under the current conditions, speculators are paying close attention to the limits of the range, and the fact is that the movement beyond either limit may affect the market situation. The downward scenario will become possible if the price settles below 1.2650, and this may lead to a prolongation of the correctional cycle. And the upward scenario suggests a gradual recovery of the pound sterling after correction, and traders will get an initial technical signal of a possible rise if the price consolidates above 1.2800. That's all for now. We keep monitoring the financial market situation. Subscribe to our channel and see you in several hours, and we will take a close look at the US trading session.